morning, everyone. Welcome to the Metal Markets. I'm Marcus D, your host. If you're new here, welcome. I've been trading for about 20 years, and I've been with Topstep for about 10 years in some shape or form. I was their first female funded trader back in the day, and that's how I got to meet the team. Let me just make sure we're all on the same page here, and the levels are all good. Alright, so we're going to have a look at the metal markets first and foremost, and then we're going to tag some of the energies markets as well. Now, the role of this show is to primarily have a look at some larger levels, statistical averages, and also the options chain, which creates the intraday flows as we know it. So let's start with copper. I do have a short copper because we do have a gamma wall at 590. And if I look at gold, it's in a similar situation, but one reason why I don't really think that gold is better than copper is because the whole options chain is not really changing much, and from that side of things, it's a pretty neutral outlook. And therefore, I'm probably gonna just watch gold, but not really do much with it. One thing to note is that the gamma wall is at 5200. If they manage to go over that, that's maybe when we can have a look at the longs. Now, this is a 4-hour time frame, so let's have a look at some of the very large time frames, which can sometimes, or most times, provide a decent outlook. This is the daily chart looking pretty flat. I suppose it's a bit of a skew upwards, but really not much to see there. Weekly time frame, again, looks like it's creating a range. We're nowhere near all-time highs at the moment. It's probably just finding some serenity after all the madness that we've had. The implied volatility has been compressing. And yeah, so for now we are just observing, maybe using it as a benchmark. But this morning I don't think that too many things are super correlated with it. Let me just double check. So yeah, copper intraday correlation on a 5-minute time frame only 0.3. Silver 0.6, so some correlation there, but again, not really anything that can help. Now, copper is probably the one that is moving more than the other two. To the downside on gold, we do have the 5100, which has appeared above 5,000. So yesterday and the previous days we had 5,000 as a big sort of anchor point to the downside. Well, that's kind of come up a little bit, and it's sitting at 5,100. It is a sort of a magnet if we ever do start to see things. And then on the upside, we have 5,300 as the nearest large call wall. But again, this gamma wall at 5,200 for now is the one to watch. Whenever you see price action in Asia doing a very smooth rise, so you can see that they started to go into that reversal for the Shanghai last hour. This is very normal, and sadly I wasn't awake to take that, but we'll see if we can maybe notice a drop, and that's also the reason why I'm in copper shorts at the moment. Let's have a look at copper in the same way. This is a micro copper. So daily chart, again a bit flat, you know, consolidation seen on daily. Weekly time frame also super range bound. If I had one of those scanners from the supermarkets, if you ran it through this chart, it will go beep 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 and find an article somewhere. So yeah, so not much to glean from that. Let's also, just for, you know, for our peace of mind, have a look at the monthly chart. And again, a lot of wicks, you know, not really deriving too much information from the massive time frames, but intraday time frames. So copper, again, another very clean rise. Whenever you see the movement that is pretty smooth with no congestion zones, if it starts to drop through that, typically it tends to bring a smooth move down by at least 50%, maybe even, you know, 75%, which is what my current trade is based on. London does tend to give a lot of neutral day types on metals, because technically there's not really much going on at this time of day on metals. So we have to wait for that overlap and at least the LME to start trading, especially for copper. Base metals are traded heavily on the LME exchange. They used to trade precious metals. That is no longer the case. But copper is pretty good for that sort of London midday time. Now we are in a weird daylight savings period of the year where USA switches on the daylight savings, but UK doesn't do it until the end of March. So in my time zone, COMEX is actually starting an hour earlier than it should, and then that's going to go back to where it should be towards the end of the March. But in the meantime, I'm looking at the gamma wall at 590 as the top here. So if they run through that, that would mean an invalidation of my trade, so be it. But until such time comes, I'm going to at least look for some drop to, you know, half of this range. And if they really start pushing into the overlap, they have a very good chance of tagging my take profits. So my take profit from the core position, which was 5 micro coppers, was taken just under this gamma wall, but obviously since it began to reverse and to roll over, I got tagged into 2 extra positions. So now if it carries on to drop, I'm going to get tagged in the final one, and then that's going to be it. The restrictions on copper and gold have been lifted slightly. So I don't think we can do full copper yet. Maybe we can, but I didn't try that, so don't quote me on it. But I have noticed that they have increased the limit, so now I can finally go back to my risk model that called for the 5 micros as a core position, and then scaling in up to 8. And yeah, so we can go back to the proper experiment that I've been running with scaling in whilst in profit. All right, let's move on to silver. I do have some levels on silver as well. I'm not trading it much unless I can catch it towards the maybe the London close or even COMEX close. I am going to have my own live stream on my own channel today. That's going to be at 1 p.m. Eastern, which should be, I've just realized that I've put the schedule wrong, so it's I need to change that. It's going to be 5 p.m. GMT and 1 p.m. Eastern, so nothing changes for those of you who are in the States, but things change for me. And to be honest, it's really putting a wrench in the works. I keep forgetting what time of day it is, and time of day is a massive thing for me. So yeah, we're going to have a look at the questions in a minute, so I'm just going to do the analysis first. So when it comes to silver, silver has its own levels up at 90, really. There's nothing much that's grabbing me at this area, but the gamma wall in silver is all the way down at 85, so that would be a good area to look for further longs. If they start to run from here, that's not a very good setup. They've already come up so far, And whenever you see the market that runs away, especially for this post-Tokyo session, it's a very slim chance that they just kind of keep running without at least some sort of a pullback. So that's what I might be looking at. If we get to 85 and we're, close to that COMEX settlement, maybe I'll pop in some longs in silver as well. What is this? These Asia high and low, that's from yesterday. I don't think that's too relevant. Is it? No, I did do that. Okay. So yeah, Asia high, we ran away from the Asia high range, which was actually reasonably small on silver. I know that, when we measure it, it's like 400 ticks, but this product has been moving a lot, and compared to what it can do, this is a pretty small Asia range. So I'm not surprised that they broke out of that. But again, some return towards these more relevant levels at 85. That could be an option. I have the London average session range low at 85.50. Is that right? Yeah, I did that. See, I don't really remember doing that today at all. Just waking up. But yeah, so similar outlook to copper, looking for some kind of a pullback towards the levels where we started the run. And let's have a look at crude oil. Crude oil is sitting above its gamma wall at 90. And before we start anything, let's have a look at humongously large time frames for context. I mean, is there context here at all? Breakout, then a huge whipsaw. This is a weekly chart. That's pretty ugly. That's disgusting. So let's move away from that immediately. Right, so after the big smash down, it's trying to crawl back up. Now, as long as it stays above 90, that means that the gamma wall is acting as a support, as a floor. And until that breaks, I'm not looking for any shorts in crude oil. A lot of development overnight. We are having some issues with storage and having issues with the transport, right? So that's not a good sign at all. And I don't know whether it's going to be enough for, them to say, we're injecting more crude oil. It's like, yeah, great, but that's such a minute quantity compared to what we normally use. And even if the war ended today, it's going to take months and months for the world to get back to where we were just mere 2 weeks ago. So yeah, it's a very volatile time for crude oil. As you can see here, trading limits have been increased on GC, but decreased on crude oil, heating oil, and RBOB, because the other two, heating oil and RBOB, they went completely crazy. So RBOB at the moment is off my list. It doesn't have a micro, neither does heating oil. They're just full contracts. And even though they're cheaper at $4.20 per tick, the fact that they're both moving 4,000 ticks per day, that introduces an enormous amount of risk. And RBOB is volatile as it is. Usually at quieter times, you will frequently see it move like 500-600 ticks a day. That is also why I like it, but when it goes completely insane, that is also when I put it to the side and I remove it from my list of tradable instruments. I want the sweet spot of an average range that is between 300 and 600 ticks per day. Anything under that, to me, gets a little bit tricky. And anything over that, it gets a little bit too crazy for old Granny D over here. So yeah, so to the upside, we do have 100, nice round number, that is now the mega call wall. But again, everything is now banking on this gamma wall, whether we hold it, whether we run through it. Whenever you have a gamma wall, you can expect some pinning around it, gamma pinning behavior. What does that mean? It means that gamma wall will act more as a pivot, so they might run through it, then not really make too much of traction under it and just keep pulling it back and just chopping around it. So it's almost like a, it's a pin, right? And then price sort of oscillates around it. So don't be surprised if they chop around the gamma walls. that is to be expected. Copper is kind of the outlier there, where if it's got a gamma wall, it very rarely goes like way above it and then underneath it, then back to the gamma wall. It's just like, oh, we've hit a gamma wall, and then it sort of settles in a pretty tight range around it, and then they make a decision, right? So that is a behavior that I quite enjoy, because it means that we've stopped at a gamma wall. And sure, can you actually, get the gamma wall broken and go into a bit of gamma squeeze? Absolutely, there is always a risk. Anything can happen. We are in a highly, highly news-driven environment, so if something happens and they see that as a potential for, bullish metals, then the gamma wall is going to become new support, and they're just going to start running away from it. So all of these levels are just levels of interest. That's what they are. But for me, for my strategy, whenever I see a consolidation around the gamma wall, I'm taking that any day. The Dark One is asking, I know you have mentioned in the past about the algo bros that used to bracket the market. I'm seeing like 200 lots on MES bracketing the market all week. I don't remember seeing this before. Well, I'm going to have a look at it. It's not regular trading hours yet. So the algo bros were a very, very particular algorithm that was running almost like permanently during July 2024. I'm not seeing that. So, you can have large institutions that put in 200 lots, but the Algobro, let me see if I can find the Algobro video, because it's just like a bookmap video. It's nothing, copyrighted. Now let me search for that somewhere, because I know that I snapshotted that for my one of the lectures in the course, just to kind of illustrate the algo bro behavior. It's gonna take a while because I've got so many videos over here. Here we go, algo sandwich. So this is what it looked like, right? Now notice that when the price starts moving, this starts moving with it, right? So that was the example of a predatory algorithm where they were just hiding stuff and not really, it never got reached, right? It was always two things, just kind of going with the price but not actually doing much. And me and Hogue were hypothesizing that they were trying to hide the true liquidity, and then they disappeared. So yeah, they might come back, I don't know. But for me, if I see that's like an obvious spoofing algo, right? Very obvious, and technically it should be illegal to do that, but again, very difficult to prove. So yeah. All right, let's have a look. Guillaume says, hi D, for your anchored volume profiles, what are my favorite anchor times for each asset? Do I prefer pre-market start? No, so I always go with the active exchanges times. So if it's Tokyo, it's going to be from the start of Tokyo till the end of Tokyo. I do not do I don't do the whole day's profile, because I'm trying to find an intraday level that works, and you want the intraday distribution curves. Now London is a little bit different, because you do have that weird overlap between the London session and then the New York session opens, and then they're kind of all smushed together. I actually don't like mixing those, so my London regular trading hours are literally from the London Open until the next exchange opens. So for metals, there will be COMEX. As soon as it starts, I cut it off, and I look at those players as kind of a separate entity that have their own way of looking at things. But yeah, it's the regular trading hours that I mostly focus on, and that will be COMEX. So if you see on copper, if I widen this, I have the COMEX hours. However, I do go all the way to the electronic close. Why? Because even though the regular trading hours stop, copper still keeps moving, silver still keeps moving. You have another sort of almost 3 hours of, price action, and that's relevant to me. So we did some tests. I do a lot of kind of algorithmic statistical tests to see which of the value areas act best as sort of outer edges as a retest. So not when you're inside the value, but when you're outside of it, and then like where do those bounces most frequently happen. And they happen for the entirety of the regular trading hours and then some. So I use COMEX start, but then electronic hours close for my profiles. And that's worked for me for a very, very long time. And if the day is really quiet after settlement, who cares? Because it's not going to move much and it's not going to impact volume too much. So it kind of works both ways, right? All right, CWAS says, hi D, I missed the level you're looking for copper to revisit. So we have the Asia low that was created at 582, but I'm actually looking for copper to fall into kind of a bottom quarter of this entire swing. And obviously we have VWAP in the way, that's never a good thing. But if it, if they really start to run, I will expect some reaction at VWAP. However, ultimately, I would like to see proper weakness through it, and then to take the entirety of this post-Tokyo reversal. When it comes to the gamma levels, we do have 583, which is a pretty decent area in the options chain. And what happens after, I don't know, because this will be, this is an older level actually. So if you look all the way back, so all the way back here at 9th of March, this is where this move started. It's a very, very decently scored demand area, even though it's kind of in the middle, but it is because the this was the COMEX settlement, and you had the huge move away from that, and that creates a decent demand, very decent demand. And then look what happened. They tested it, it went up. So the next test is not going to be the new test. It's going to be like second test of the demand, and that tends to lower its probabilities. Like, sure, it might bounce again, but it may not. So I need to make sure that everything is in order once we arrive there. Okay, Stay Puffed says, bar chart helped me with my M&Q trade yesterday, thank you. You're very welcome. This is what we're here for, to spread awareness about the less known concepts that are not that well known in retail, but that are heavily used by institutions to get a better outcome for their own investing activities. A lot of questions about the gamma levels. So I use a couple of things. I have an API that pings the full options chain. Now that's a pretty expensive exercise for retail, because you would be looking at costs of about like $2,000 a month or something. It's not really that accessible. But you can use gamma levels from MentorQ. They are a company that has simplified the way to look at gamma levels via just one indicator on the chart, and they plop a level, and then they kind of tell you the weight of each GEX level compared to its open interest and a whole bunch of other things. And they tell you where the gamma flip is, which they call high volume level, HVL. But it is basically the gamma flip. And they also have a lot of resources of how to use them. Now, gamma levels are not necessarily complete stopping points. Some of them will be accelerators. And then the biggest takeaway from gamma levels is that they are areas that are there irrespective of price action. So even if you're at an all-time high. So let's say that crude oil goes into a new all-time high, somewhere above 120. So where are the biggest strikes above that level. And wherever there's a biggest strike, more often than not, that will be your new stopping point. So they're kind of invisible support resistance levels that are not even on the chart yet. And very frequently you will see that Asia, as the session that does the price discovery first for the day, they will create Asia high, Asia low during Tokyo hours, almost exactly to the tick where the highest open interest prices are. I go a step further where I'm looking for the market to first and foremost I use those levels, but I look at the Greeks as well. So there's a concept of implied volatility per strike. I track that every single day, and then I smush that with the open interest from the gamma areas. And that's how I create my own anchors for intraday. So, you know, that's something that not a lot of people do, but, you know, again, I've been doing this for a very long time. And on the other side, I do like to run options trades. And those are not intraday positions, right? They will last me for like 20, 30, 40 days. Depends on what I'm trying to do with them. If I'm in long positions on options, those typically only last for a few days because I don't really, like I do an option with a long expiry, but I will then take it off as soon as I get the move that I'm after because I don't want the time decay to come and erode my profits. The thing with options is that you have this thing called theta, and it basically the longer you run a long option, the more it eats into your profits. So you never want to run a long call, for example, until expiry, unless your only desire is to do a long option that's going to mature into an actual options, into an actual stock that you own, right? But when I'm doing short calls, which was the case for quite a few years on crude oil, I used to use like weekly ranges and, you know, very well-defined weekly ranges. And then I would run short calls from the tops of those ranges for about a month or so. And in that case, because it's you're writing an option, the time decay works in your favor. So if it stays underneath it, not only do you get premiums, but you also kind of start benefiting from time decay. Again, options are a little bit tricky to explain to pure beginners, and it's almost like you hear English, you hear words, like you know words, but you don't really know what they mean. It's one of those. And but MentorQ is a good starting point for sure. They are the only service out there that actually has commodities. You know, most companies that have dark pools, they will only have equities and SPY and QQQ and things like that. That does nothing for me. Why? Because I'm not really a core equities trader. I trade, like, have I traded them? Yes, of course I have. Everybody who's been in this job for a hot minute, everybody's traded equities. And I still trade DAX, but it's, you know, my core expertise lies in energies and metal markets. So take that as you will. All right. Let's have a look. Let's have a quick scan through other markets as well. Maybe have a look at natural gas, because natural gas looks actually pretty tasty. We have a double-sided put wall at 3.3 on Natty. Let me just see. The gamma wall is so far away, it's not even worth mentioning. It's like down at 285. It's like, whoa, like falling off a cliff. Crude oil is still holding that 90 level. So again, I don't really want to do anything with Natty until crude oil decides what to do with it. The correlation between natural gas and crude oil is normally not a thing, but because of this Middle East conflict and a widespread potential issue with the energy products, it's tricky, right? So it's going to be there's going to be some kind of a correlation between the two whilst all of this is kicking off. Matt says, do I mainly look at GEX and ADR levels? So I'm a profile, like I call myself an order flow and profile trader. Anything that I add on top of that is just to aid in the situal awareness of the actual product. So average daily ranges are both magnets as well as potential reversal points during normal days. But you can have outlier days that overshoot ADR and then just keep going. So that also gives me a way to maybe identify that I shouldn't be shorting the market at this point. So they kind of work both ways. But generally, the way I look at the markets, it would be open sentiment via the TPO profiles first. So where were we yesterday in relation to today's open? Then I look at how much space we've got statistically. So are we anywhere near the ADRs already? Now on the metals, you will very frequently see the behaviors where Asia or London reach the ADR, but then they kind of hang there until COMEX opens and then they reverse. It's a very common play. And then after that's done, I will then see where the gamma walls and option walls are. And obviously Asia high-low for the relevant products. Like obviously in natural gas and crude oil, Asia for most years is just not an event. Like they don't really care. But London high and low, they are better levels to maybe look for those liquidity sweeps. Basically run through, stop, run and reverse from London high, London low. But they need to have a good range, right? If London was like a tiny range, then that also doesn't come into play even on the energies. However, because you have the Shanghai exchange on metals that is very, very lively, you then have the opportunity to use the Asia high, Asia low as an additional orientation point. But that's it, right? Those sort of 4 or 5 anchors is the only thing I do every single day. Every day is the same. The only thing that's different for me is that these anchor points through either of those concepts are always located in slightly different areas. So that's what provides situational awareness, right? Today the gamma wall in copper is 590. Tomorrow it might be at 585. But it's still the gamma wall. It's still the same orientation point. So that way I can then formulate hypotheses where I'm not running all over the chart and going, oh, this is, what's happening. So I prefer to have all of those done and dusted before the session even starts, and then as the day develops I start to formulate 3 or 4 hypotheses for both sides of the story. So 2 longs, 2 shorts ideally, almost never at the same point. So if I have a gamma wall at, let's say you use crude oil at 90, I will first say to myself I maybe want to run longs from 90. But if the gamma wall breaks, I will not then be scrambling to get into a short, because that's not a level where I want to be short from. I maybe want to be short from higher up, so maybe from close to 100, or I want to be long from 85, or even lower down, 80, for example. Whenever I see people who are using either or at every level, it's like either long or short at 90, either long or short. That's not a hypothesis. That's just you going, well, I'm just going to chop myself up in this area, like indefinitely. And then if it is a gamma wall, if you get that gamma pin and you are a momentum trader, it's the days when you get absolutely run over. Like I've seen this happen so many times, where people are like the price is stuck in a range and they're like, right, I'm doing a breakout above. Then they do a liquidity sweep, take it back into the smaller range. And they're like, oh my God, the market's going against me. It's not the market. It's you. Yeah. how much would you say there is a subjective trade preference versus bot-like execution? We're all humans. There's a lot of discretion. A lot of discretion. I am probably more methodical and systematic than most people, but even with me, like, I'm the one who needs to decide whether, I might execute or not. And, because we are human, we also have a bigger flexibility to do something. When you're writing algos, which I have done for the last, I don't know, probably like 8, 9, 10 years of my career, you cannot write an algorithm that's going to replicate the situational awareness and adaptation that a human has. Otherwise, it will never trade, or it will do so many stupid trades that are not very well defined. So the bots have to have one idea, one entry condition, and one target. That's it. For the entry condition, you can never have more than about 3, maybe 4 conditions. For me, that's always a level, so that's 1, time, and then some sort of price action around it. Maybe coupled with some volume, if it's an exhaustion sort of type of trade. And that's, that's it. That will be it for the algorithm. If the algo then is wrong on the day, you can't just go, well, now run a trending algorithm. That's not a thing, right? Because it's going to get confused with the signals. If you then get, like, for example, sometimes if you try and run 2 algos, one, let's say that it's an Asia high-low sweep and a reversal, but then the other one might be breakout from the Asia range. So what's going to happen if you get a day when you have the smash through the Asia range, but then they sort of chop around a little bit. But in the meantime, the trending algo also gets a signal that it needs to go into a breakout, and then you have a mess on your hands. So you can never run like multiple algorithms that have multiple conflicting information around them. Maybe you can run a basket of trades. So maybe if you're looking at, for example, short copper, maybe you can say, well, just in case if silver breaks out, let's go silver longs instead. And then you have 2 separate products from the same asset class that are sort of doing things. But I know that some companies, I don't think Topstep is against that, but I know that some companies won't even let you do that on correlated assets. So, if you have, short copper and long silver, some companies would consider that a hedge as well, which is not really what's happening, because they are very different products. They can actually move in a vastly different way. But yeah. Let's see. Gex walls and Gex pins are different animals. Yeah, absolutely. Like gamma pinning is literally happening around a gamma wall. But Gex levels, they're just levels with different sizes of open interest. So naturally they can be weak, they can be moderate, or they can be monster levels, right? So the bigger the level in a mean reverting environment, which is what we call positive gamma, they are more likely to give a kind of a stopping point, either a ceiling or a floor. But you can then have conditions of gamma squeeze, where the prices, for whatever reason, run through the gamma, and then the market makers have to start hedging with the movement. Because imagine this. Let's take copper for an example. What do we imagine that the dealers are doing around the gamma wall of 590? Now, we can't know exactly what they're doing, but we can sort of extrapolate, right? So you can have an idea that the dealer is probably short calls at 590. They're short calls, right? They don't want the price going over that. If the price is under the gamma wall, everything's hunky-dory, price action is pretty calm, and you will see a lot more ebb and flow in it. So that's normal. But if the prices start rising above the gamma wall, above the short position, they're now underwater, and they're now not hedged properly in order to stay neutral, because dealers have to be flat to the best of their ability across their positions. So when something starts losing money, their short position starts losing money, they have to start buying outright futures in order to balance the neutrality. And the more the prices move away from their position, the more they start buying. So that is the function of a gamma squeeze, right? So that's how it all works mechanistically under the covers. And once you understand that, you won't necessarily be going, oh my God, what's happening? It's not like that sort of a, dumbfounded, flabbergasted moment of what happened. It's never going to happen, because you will know what's happened. You might be in a losing trade and it might whip you out, but you're not going to freak out. So therefore your brain is not going to see that as a mistake. It's going to be like, okay, gamma squeeze, I see. So the dealers are now losing, so they have to keep buying. And that's the only times when I would be considering just going into a long trade, caveman trade. We had this question on group coaching just the other day. So yeah. Guillaume says, maybe I missed a tip, but I'm beginning to use the fixing hours of silver and gold. Fixing hours looks better for action price. Yeah, so here's the thing. We don't trade the fix. So we're going to have the silver fix happening in about 40 minutes time. But you don't trade the fix. You trade the fix later in the day as sort of a pivot, or sometimes a bit of a directional indicator. But the fix will cause extra volatility at that time of the day. So it's going to be like a lot of jumpiness, and then they decide. Can you have a sharp move away from it? Absolutely. Can you have a, nothing going on, just kind of like, almost like a gamma pin around the fixing price? Absolutely. So that is something to stay aware of, but not necessarily to actually trade it outright. So yeah. Matt says, I wrote 12 algos for trading, all failed. Yeah, writing a profitable algo is not easy. It's not easy at all. We wrote 21 of them, and only 2 or 3 are getting leased by others. And we don't provide it for retail. We provide licensing for institutions. So that's the other part of our business. Matt also says, what do you think is the ultimate way to calculate GEX? When I do it myself, I get one result. Then I hear Jack say we're in a different regime than what Matt thinks. Yeah, so I would urge you to have a look at MentorQ videos on what is an HVL, gamma flip. But that's basically an area where the gamma is as close to zero as possible. So that represents that break between the negative gamma and positive gamma regime. Very difficult to calculate yourself because it's a lot of data crunching. My best suggestion would be to try and use maybe AI for that, and then use the entire options chain. You can't just kind of pick and choose and go, oh, the gamma flip is there in and around these 50 strikes that I looked at. So you have to like crunch a lot of data, and then the bigger the ranges, the more strikes you're gonna have, and those kind of files, they go quite massive. So a lot of the AI services, you will need to have something that can handle large amounts of data. But honestly, the better way to do it is not to calculate it yourself, just to use a service that does it for you and tells you, here's the break. So anything below that is positive gamma, anything above it is positive gamma, anything below it is negative gamma. And then you can start to formulate your own positions and your own ideas. But just beware that positive versus negative gamma is not necessarily connected to the direction on the day, right? You can be under the HVL and still have a huge move of negative gamma upside. So it's not necessarily a directional thing, even though in order to go crawling back to the positive gamma, price needs to go up. So there is a logic there, but it doesn't mean that, oh yeah, we're above the HBL, so therefore it's going up. No, it's not how you look at it. So yeah, instead of messing around with yourself, messing around with it yourself, I just, I would say just use a service that's meant for that, right? Not Connor says, yesterday you covered previous candle volume being slightly exceeded by the current candle volume. Please could you cover this again? Yes, you're talking about the accumulation versus distribution. I think ES might be, or the daily chart for the ES might be a good example of that. I don't have any levels on ES, don't ask me, because I didn't do it. We've been in a range since October, right? Let's smush this a little bit. Here's October. End of October is when we established the range, and since then we've kind of been chopping. Yes, it went into another all-time high, but it has massively been in range, right? So when I look at something that it might be a potential accumulation or distribution, and by the way, this works better on 4-hour time frames and higher, because there's more trading information in large time frames, then you can try to figure out, like let's say equity indices, they are what? They are very upward biased. So naturally, when people are seeing a range, a lot of people would just be expecting a reaccumulation before it goes even higher. But here is what I saw that was worrying me. And I spoke about this when I was on with Anne-Marie for one of the group coaching segments. We both spoke about it. What was worrying me? The fact that if you analyze how the volumes were looking, anytime we went into a short, those short volumes were bigger than the buyers. So what does that tell you in a very simple way? That there are more sellers at the time than buyers. I know that some people say, the volume bars are useless. If it's a large enough time frame, they're absolutely not useless. Am I the biggest volume trader? No. Do I consider myself a volume trader? No. But do I use it for a little bit of an extra nudge in my analysis? Absolutely. Am I a Coach J? No. He uses most of his analysis to effectively do the entries. I don't do just that, right? I will have Asia high, Asia low, value high, value low, ADR, gamma walls, blah. But then once we're there, I will look at things for like an exhaustion candle to be in a very specific range. And I will also look at how bookmap is doing. So with bookmap and mean reversions, you need to see 3 consecutive bubbles of the same color. And then you also need to see what the cumulative volume delta is doing. So that's definitely a part of what I do for entries. It's a very difficult skill to develop. It probably took me like 7 years to actually get comfortable with order flow, real-time orders going through. Even though volume and institutional order flow, like supply and demand, those are all order flow concepts. However, intraday time and sales stuff, that was just like, just don't even go there, right? To me, this thing, time and sale, was the bane of my existence. I actually went so far to call it cancerous. That was my disdain for time and sales. Because my brain doesn't process pure numbers very well. I'm very good at calculations, but when I see this, it's just like, yeah, whatever, there's some longs, but it's not telling me anything. So I need price, volume, and pattern in order to have a good idea of what's going on. So until bookmap came along, I was really not looking forward to looking at the orders. Now I love it because it's a very visual medium. I'm a former session musician. I did that for 20 years. I started when I was 14, trading, playing professionally, and then I did it until I was like 34. And then at that point, my trading took over, and I decided that I wanted to be a professional trader. So no longer a musician, because hopping around the world when you get to your mid-30s is not really the best thing. And then I started to develop my skills even further so that I can make this into a career. And I did that for many years as well. But I started trading in like 2007, right? So it's been a long, long time now. And for the first few years, I absolutely ran parallel careers. So it wasn't like, I'm a trader now, I'm going to stop working as a... No. 5-6 years of being a musician, and the final 2 years were actually really difficult because I got an in-office prop job that wasn't even in the same country. And then I still tried to do like weekend gigs and stuff, and and there would be days when Thursdays I would have to be in Moscow, and then I would have to come back and be in the office on a Friday. That was very tough. Very tough. So yeah, one thing that I was looking at volume-wise is that we have a range, right? And look at every day that we had shorts. Here's the long side, so they go up, tag the all-time highs, the very next day, 2 next candles. Let me do a crosshair. 2 next candles, bigger volume. And yet they end up with a buying wick. And then the next day, big candle, but lower volume. Next 3 days, big volume. So what does that tell you? It tells you that there's more sellers than buyers. So that's why I was like, we might be in trouble here on equities. Is this like the AI bubble about to burst? And in my career, I have seen one bubble burst, and then we had the property bubble. That was like a massive one. And so it's... it's useful. It's useful. Just, drilling down into the volume, but using a larger time frame. And then just getting like the overall picture of what's happening. So hopefully that clarifies how I use the volume bars. Now that's one way. The other way is to look at exhaustions. So let's see. Don't know whether we had exhaustions today, but let me see if I can maybe... And for this is the opposite. It's like you're looking at a super tiny time frame. Tiny time frames. I always thought that would be like such a good name for a band. Topstep band. Tiny time frames. Alright, so here's kind of an example of it. So let's just imagine that you had gamma walls. I mean, they can bring sweeps as well. So yeah, so we have a gamma wall, 590. Look at the volume bar that preceded the reversal. What's it doing compared to the previous volume bars? And remember, when you're trading, this is all you can see. So hindsight cannot be a part of this, right? You have to assume that you will only see what the market gives you at that particular time before you enter. So what am I seeing? I'm seeing the market flipping you off, right? It's saying, yeah, we're not going up. And then right after that, the market starts to stall, and then you end up in a range. Now, eventually we did come off out of that range, and it starts to fall away from it. So this is what we refer to as the exhaustion volume bar. It means that the prices have been going up and up and up and up and up, and then they try and push even more after it's already come up a million ticks. That's going to be more often than not an exhaustion candle. Okay, more often than not. Not always. Sometimes it can be a sign of a new trend that breaks above it. But the one very important thing is that it never matters to close any meaningful time frame of like 30 minutes or more without some sort of a selling wick. And therefore, I'm calling the gamma wall a ceiling for now. Doesn't mean that it might not break at some point when we get into the craziness of COMEX. But for now, we had an exhaustion bar. We came away from it. And a lot of the times, this kind of price activity will stay until we get to COMEX. And then eventually they start to pick a direction after a lot of drama and chopping. So that's why I don't really freak out much in positions. And I generally trade with smaller size comparative to the account balance of whatever I have at the moment. And I just try to stay in the trade with the original stop, not over managing, not, moving stops, removing stops, putting it to smaller levels. At the moment, I want width and I want room. And I'm one of the few people that doesn't really care that the market goes into some drawdown. My stop is there for a reason. My stop is there above the Asia high. If they get all the way up there and they shake me out, so be it. I'm absolutely okay with that. Why? Because even on my full position, this is still a controlled loss, right? That it's all about the controlled loss. And if you start moving stops when the market structure is not telling you to, that's not a decision taken by the logical part of your brain. That's a decision taken by the emotional part of your brain, the lizard brain, monkey brain, however you want to call it. It is not a result of prefrontal cortex. And here's another thing. The larger the size you have comparative to the account size, and even for some people, they have a large account, but they can't handle large sizes. That can happen too. For me, I don't care as long as the account balance is large enough. That's like kind of my breaking point. But, on prop accounts, I do have, a bit of kind of like, because, at this point, even, 20 grand for me would still be a micro territory. It definitely would not be, hey, let's trade 5-10 minis on that. Because I think that's a ludicrous amount of risk, right? But at the same time, you need to find a balance on the prop account where you will control the downside and then maximize the upside. So that's what I'm trying to do. I've always been super uncomfortable entering trades that are already in profit because I saw the averages moving away too much from my original core position. So what I'm trying to train myself to do this year, I'm trying to get more comfortable with this scaling in and keeping a core position at, let's say, 4 or 5 micros, but then as the market starts to move in my position, to start adding, but it has to be a multiple of micros to begin with, which automatically means that on a 50K, that's probably not going to be good enough because you have a limitation when you first start. And then you also only have 2 grand to work with, which is frankly peanuts, right? So I'm trying to find like middle ground between me being okay with scaling into profitable positions whilst staying on a mainly core position in those that are not doing what they're supposed to be doing. And it's been a journey, guys. It's taken a lot longer than I imagined because I caught myself only doing, core position and then adding just one. And that started happening about a month after I was practicing the 4, and why obviously we had the limitation of on copper, so you could only do 6. And then my brain went, no, this is good. I mean, the average is pretty much the same. It's like, yeah, do you? But that's kind of not the point of your exercise that you started about a month ago. So what gives? Now that the restrictions are off on copper, I can kind of go back to practicing that. But I've definitely had 2-3 weeks of noticing that my brain is flipping back into comfort waters, and that's not what I want. I want to push myself out of my comfort zone and make this the new way of executing on prop. We'll get there. We will get there. How did the metals perform in those equity bubble bursts? Well, at those times we had a very different experience where the old portfolio theory was still a thing. So the metals typically were going up because people were closing out positions in equities and then running to the safe haven, which used to be gold. I don't know whether that's true anymore, to be honest. Now, I think everybody looks at cash as the safe haven, and that's kind of brought, different relationships into the mix. During COVID, though, That wasn't a bubble that burst. It was a, pandemic. Gold and equities were going in the same direction. Go figure. We were all just like scratching our heads going, isn't that like the biggest risk event that we can have? And they're buying both gold and equities. And sure, we had that smack down, but how quickly did it recover? 2 weeks? That's nothing. All right, let's see some chat. Bugs always pushing, says top of the morning. Yes, gonna have St. Paddy's Day soon. Dr. Dax says painful range for momentum traders. Absolutely, absolutely. Lance briefcase, you look great, D. Hope your trading's been profitable. I'm doing well on the option side. Intraday, I'm still trying to figure this out because it's a new thing for me, scaling into profitable positions. So I just need to relax, I suppose. I need to relax. But that's why we practice. That's why we practice. Even after so much time. The problem is we never had micros back in the day. So the way I approached prop accounts was just like one position initially to build the account, just one mini, do or die, right? And I was lucky enough not to get a huge, the ranges back then, even when we had the crude oil crisis in 2014, they were not 700-800 ticks. They were like, it would run for like 300, 350. And that would be it. So the risk on one mini was actually pretty contained. I think there was only one day where it kind of ran away massively. That was one of my biggest days of my career. But you'll never see me being like one of the traders that's like, yeah, I just made $100,000 in one single day, because I'm never oversized enough. In order for me to make that. And I'm not talking about options and running them for like several weeks and then banking on one day. That's not the same. We're talking intraday. So whenever I'm doing intraday positions, comparative to like the biggest days that I've had, even on my large account, it was like maybe 24 grand. But that was like right after COVID, and I had a massive, super massive account. And even that was like a tiny position initial risk compared to the rest of it. And then it just ran for like 3-4 hours or something, and that was great. But that's not going to be, me full porting prop accounts. That's never a thing. And Bug's always pushing, also asking, do you have a friend with an accent for me? Why do you assume that I would have foreign friends? Like, I married an English guy to hang with English people. And I think I'm getting a bit too old to have single friends, because most of my friends are in their 40s and they all have families. So that would be a no. Sue says, hi Dee, thank you so much for teaching and sharing your wisdom. I love learning this info. Thank you for being here, Sue. I really appreciate it. Keith says, what size and how do you calculate in micros to trade a 2000 account for MES? You start backwards. You start with an assumption that you're going to not lose more than $200. Now, notice that I don't say that you're not going to make more than this amount. No targets, just risk. So you shouldn't really be losing more than $250 max in the beginning stages of a funded account. If you do more than one trade per day, that means you have to fit the sizing into whatever number of trades per day you're doing. So notice how we're going backwards, right? Risk first, number of trades per day to fit into that risk. And then you come to stop size and position size that you can fit into the 200 and the number of trades you want to do per day. I always start my market stalkers on divide the maximum loss allowance by 10. That becomes your daily loss limit. And then you do no more than 3 maximum trade attempts per day. So that gives you some room. And to me, it's been the fastest way to get somebody over the hump and to start to get payouts. Anytime people start to veer off of that, Eastern Europeans say veer. Because Eastern Europeans generally have a problem with V's and W's, don't they? No, don't we? Whenever my traders start doing, oh yeah, I'm going to do 3 products like you do, and then I'm going to do 2 in this one, 2 in this one, 2 in that one. You don't have consistency to do that yet. Otherwise, you wouldn't be with me, right? So just try maximum 3 trades per day. Yes, you can do multiple products, but no more than 3 trades per day, right? Shoot for 2R multiples as a default position, but don't shy away from taking 1.3 or 1.5 R multiples if they occur. Why? Because this is not swing trading. If you get to 1.5 and we get to the next day trading time zone where enforced hedging is supposed to be happening due to some kind of settlement, don't hold that trade anymore. It's the end, right? So just take whatever's there. 0.8, 1R, 1.3, 1.5. Excellent. This is intraday. So yeah. What is the limit for MHG on 50k XFA? Yeah, it's probably 1. Probably 1. Maybe 2 now. I don't know. Harinder says your teaching is priceless. Thank you. I do appreciate that. Not Colin says, I got one. Do you count pop-off tops as exhaustion? Yeah, they're basically liquidity sweeps on large time frames, and then everything starts rolling over. Troop says, you typically swing trade in your personal account, correct? I do options trading for swing trading. I don't really do outright futures anymore for swings, and I haven't done that in a very long time. But if I'm going to swing trade, I have an options position in mind. But I do have what I refer to as my YOLO personal. And my YOLO is different than your YOLO. So again, the positioning is still going to be fairly contained. The Cavalier needs to go out. Hold on. My deaf King Charles Cavalier is on diuretics, so I just need to let him out because poor boy. Be right back. All right, he's gone out. He's probably gonna want back in at some point. Yeah, so for my personal YOLO, I literally, and get this, only trade COMEX settlement and NYMEX settlement. Does that surprise anyone? I like the end of day moves, I think, for me. And also because I can hold trades past the New York close for another hour, that's what I do in my personal. So at the end of the day, I might pop in a trade. I don't like getting involved in the madness, especially not during headline risk. So I do get involved in prop accounts for that purpose. But most of my personal intraday positions are end of day positions. Do with that what you will. John says, hi D, for the initial balance times for Asia London session due to the daylight savings nonsense here in US, should I move analysis to the initial balance back an hour for those sessions? Yes, because now London until 28th of March, London is going to be an hour out. But Asia, Tokyo doesn't change. They don't have daylight savings, so they stay year round. So that means when I change times, I'm going to have to change my Tokyo open and close times as well, just to make things a little bit more difficult. So yeah. Not Connor says he's on point with a demanding bark every time. That's not him. That's actually his son Crichton. Lenny doesn't really. He growls at his kids, but he doesn't really. He barks at the animals on TV still, even though he's deaf as a post. But Crichton, one of his sons, doesn't like being in here. So every time he's in here, he's like freaking out and wants out because he likes the cooler weather. I actually frequently find him asleep in one of the bathrooms. Like, what are you doing? And he's like on the floor. It's like, you right? I'm like, dude, what are you doing, man? It's cold. It's like, well, I think it's comfortable. But yeah, anytime, so Crichton is outside of my office door, and then Lenny scratches to get out, and then Crichton goes, "Rrr, rrr." They've got a strained relationship, those two. They don't fight or anything. And for the most part, Lenny doesn't really care about Crichton, but Crichton is a very high energy dog. And there were times when Lenny got a bit annoyed with him. So Crichton would be doing like, yeah, jumping around. And a couple times Lenny went into a multi-air snap to discipline him. And there's nothing better than dog-on-dog corrections. As a human, you can try and discipline him as much as you want, but they just don't see it that way. And Lenny is the only one who has any sort of authority over the puppies. It's quite funny to see. And he's so meek and mild. He's just like, typical cavalier. He comes and says hi. But with his kids, oh my god, he's just like, they come close to his bowl while he's eating, and he's like a golem. Like, okay. Genius says just the last hour or into the next open. So I like Comex and NYMEX last hour. Comex last half hour. NYMEX last hour. And then usually I will keep those positions all the way through until almost the end. So for usually for my time now, that would be 10 p.m. when now it's 9. It's normally 10 p.m. But yeah, so basically until the maintenance period starts, because there's an hour for maintenance. So I hold it like 5 minutes before then, and then I actually have a script that kills everything. It says liquidate all brackets. So it executes 5 minutes before everything closes. So even if I forget or I fall asleep or whatever, I know that I'm not going to get hit with an overnight margin. DJ Ron says fly on the wall today, but happy to be here. I'm always happy to see you. Do you know when the VIP program is offered? Is it like a lotto-like entry? Yeah, it's a random draft. So I don't know when. I think it's going to be later in the year. I mean, do we want to run VIPs while all of this is kicking off? Probably not. Like, let's trade crude oil and use 1 million ticks for a stop loss on 1 micro. The object of the VIP program is to limit risk. What is the risk on crude oil and 1 micro? $300 because you have to use 300 ticks. Not the best environment, right? So we're kind of trying to figure out when that should be. We also have a lot of new stuff that we're creating, but I'm not allowed to talk about it. So yeah, stay tuned. But yeah, it is a random draft, so you have to fill in as many forms as possible when the forms are up during the main broadcast. But even if you fill one, your name will still be in the ring. However, you get a better chance if you fill more of them, obviously. Alright, so let's get back up to my 30-minute time frame here, because I am already in a trade, so there's no point me staring at low time frames. Just tracking what's going on. Natural gas went into a nice sort of move down. Let's see if they can get to 310. Now, this is now GEX 2. Yesterday was GEX 1. The previous day was also GEX 2, so they just gotta keep tagging. It's like, let's increase open interest. Let's decrease open. But yeah, it's still the same level, 310. Nothing changes. So we'll see whether we can find some trades there. Let's go back to crude oil on this one. Crude oil holding, so no more correlation for now between Natty and crude oil, because crude oil held the gamma wall. All right, so that's not going to be that useful. It was useful for the whole 2 days, like Natty and crude oil actually correlating. I mean, wow. The silver fix, what is it? So fixing prices, it is done to give institutions and anyone who wants to buy or sell the actual physical commodity a price to quote, right? So that's where the fixing is done. Shanghai has a couple, London has a couple on gold. Silver fix only has one, which is midday, so that's coming up in 15 minutes, just when I'm finishing this stream. Normally, if we don't have the daylight savings nonsense, we can run through the silver fix and see how that volatility is playing out. But we won't be able to do that today because we're running on the daylight savings weirdness for another 2 weeks or so, 2.5 weeks. So yeah. But yeah, tape is a bit slow now on copper, so we need to wait until the next news release. I might actually hold my trade through this news release because it's the unemployment, I think, today. Don't quote me on that. Let me have a look at the calendar before I start saying. Calendar. Yeah, unemployment claims. Okay. Oh, don't forget Natty, natural gas, today has its inventories. So normally for my time of day, it is 3:30 or 4 p.m., depends on the week. But today it's actually at 2:30. So I'm just going to let that do whatever. And I'm going to probably trade quite late. I don't know whether I'm going to be doing more trades before my own Market Stalkers live stream at 1 p.m. Eastern today. Because I want to make sure that I have some juice and the limit on the number of trades I'm doing per day enough for later. Otherwise, we're going to have to trade something else. Maybe going to my own live account. Woo. Do a YOLO trade. Yeah, that reminds me that I need to change. Can I even change the times? No, so I'm gonna have to delete this. Can I delete it? How do I delete live? I don't know how to do this. Oh my god. Oh, there it is. Okay. I'm gonna recreate the new stream an hour earlier. That's great. So yeah. Also, I have a meeting that I need to get to right before my own live stream. So if I'm a few minutes late, don't freak out. I will be there. Troop says third rejection of trying to break above the previous 4-hour high on NQ and ES. I mean, it's still early, right? It's still early. I haven't looked at the levels on ES yet. Let's have a look. Yeah, we have 6,700 on ES. That might be a good area. And higher up, I don't know, it all gets a bit messy, to be honest. We have a lot of congestion and stuff. Don't know whether I would want to be trading into, so I'll show you what's on a 30-minute time frame. This all looks clean, right? It looks fine. But then you get into this. This could be a supply. So let's have a look at the visible range profile. Yeah, so look at the visible range volume profile. Do you think this will be a smooth ride if we break upwards? Do you think that all of this volume is just sitting there as a ceiling? It's not going to be great. I feel like ES has more chance to kind of fall into this little gap. So if you take the low volume node from the recent times, there's a low volume node here, but there's also one right here. So if they start to go down, this will be an area where they really run through it pretty quickly. And then this, I don't want to see high volume if I'm going to do continuation trades, because whenever you have like dense areas of volume, which is a supply, right? It's a supply, technical supply. Usually that might work, but it will add time onto your position, and then you'll just be struggling. Goes up, sells off, goes up, sells off. Don't. Like if you want to do like a momentum trade, you really don't want to see thick volume areas technically. So yeah, tricky situation for equity traders. I do not envy you guys. Yeah, but the drop looks much better, right? Looks a bit thinner to the downside. Ooh, copper's woken up. Wakey, wakey. Shikari says, can I marry you? I think my husband of 20 years might have something to say against that. So that would be a no. That would be a no. Alright, we're going to finish it up here to make way for the daytime show. I don't think I'm on the schedule today. I think I'm on group coaching tomorrow again. And I'm not doing the stream on Fridays for the metal markets because I need to rest a little bit. Otherwise, I won't be able to stream at all because I get absolutely knackered. But yeah, so join me if you're not doing anything at 1 p.m. Eastern. I will be doing my end of day COMEX and NYMEX trading on my own channel, Market Stalkers. So that's if you miss me, then pop in. Until tomorrow, let's be careful. Yet again, headline risk all over the place. Keep your head on the swivel and one eye on financialjuice.com for some squawk news. And of course, watch Topstep TV. We bring you all the news as and when it comes. That's all I have for you today. Enjoy the daytime show. I will see you again very soon. This was the Metal Markets on Topstep TV. I'm Market Stalker D. Take care.